Hello everyone, today June 12th. I'm going to briefly look back on the investment backdrop, what is reassuring, what is perhaps a bit concerning, what we're going to be monitoring going forward. But before we do so, let's just go back to where we were 3 months ago at the time of the last webcast, which was just at the beginning of one of the worst energy crises in modern times. And back then there was essentially two prevailing narratives. Either oil prices was headed to $200 a barrel, in which case we would have a global recession, or there would be a swift resolution allowing prices to go back to where they were. So what actually happened? Something in between, where in the absence of a resolution, oil markets nonetheless found somewhat of an equilibrium thanks to the greater usage of some pipelines, thanks to the fact that the respective blockades are slightly permeable, but most importantly, thanks to substantial usage of global oil reserves, which by definition means that this balance is temporary. So we're going to have to see very soon a greater pickup in maritime activity in the Persian Gulf. But regardless, in any event, what's become clear now is that energy prices are not going to go back to their previous low. They're going to remain higher. But the good news is that we're seeing that it's not preventing equity markets to renew with an upward trend, which has been the story in the second quarter, as you can see here. And this rebound in stock price has not been entirely led by hope. It's actually been driven by substantial and sustained earnings growth across the world, with earnings growth actually stronger than the increase in stock prices since the beginning of the year. And that is in part reflecting substantial earnings gains for a few stocks involved in the manufacturing of semiconductors, notably in emerging markets. But globally speaking, it remains true that economic activity has remained rather positive, with, for instance, the US Economic Surprise Index being at its highest since 2024. And that is also good news, but it also brings and raises questions with regards to the future path of inflation, because we all know that inflation reacts with a lag to growth, and we've seen an extreme case of that in 2021 and then the inflation surge in 2022. That has not been the case in the last 2 years, most likely because over that period, the labor market was much more in balance, and that remains the case for now. And so that's why this is a risk to us, not a view. But what's clear, though, is that markets are going to be paying a lot of attention to what the Fed's about to do against this rather complex backdrop, and especially so since we are going to be facing for the first time in 8 years a new Fed chair, Mr. Lajoie. And just 3 months ago, markets thought that he would probably be able to cut rates slightly. But as of late, markets are actually discounting perhaps a few rate hikes going forward. So we'll have to see. But even if rate hikes actually do happen, in our mind, this is not necessarily a problem in the sense that it is much better having roughly neutral monetary policy than perhaps overly accommodative interest rates, which would only create a bigger inflation problem down the road. But if we were eventually to talk about restrictive monetary policy, now that would be a different discussion, and that's the risk that we're going to be monitoring, but that's not the expectation as we speak. So 3 takeaways for you today. Essentially, again, the worst has been avoided, is likely to continue to be avoided, even though we don't expect a perfect stability here in the Persian Gulf, which is why we'll have to keep an eye on inflation, which is definitely not on track to go back to the 2% target, which we haven't seen in just over 5 years now in the US. And so we'll have to see how Mr. Lajoie is going to be navigating all of this. But globally speaking, we don't expect any massive changes in global trends that are rather positive for equity markets, as we have seen. But we must remain vigilant here, because the fact of the matter is that the range of outcome, the range of uncertainty remains exceptionally large. That's it for today. Thank you for listening. We'll talk again in September, and have a great summer, everyone.